woke up exactly at like 9:30, 9:33, and I was literally exactly at the high right there. That's so funny. Okay. So remember, we got a Tesla call and a SPY put. The reason why we got a SPY put is because we've been talking about SPY hitting this level all week and we've been waiting for it. Now that you've hit it, we decided to wait for today to get the put instead of yesterday because I wanted to get something a little bit cheaper. So it looks like we're kind of going along with the same idea. So far we're up 30%, 35% here on the puts. Come on, Tesla, get bought up. I'm thinking Tesla's going to get bought up to like 320, 330 maybe. It could just fall out the sky here. Remember, Tesla's supposed to fall to 260. So that's the one thing you have to watch out for. Again, everybody, options are up 35% here. Remember, we're going to wait for this to fall down to 631, but if you want to claim profit, you have a bunch of opportunities. Just make sure you claim at around the reversal points. Anytime around the reversal points is perfect. Let's see if SPY is going to make some new supply and demand zones as well. I've been waiting for this. By the way, yesterday I spent the time to fix all the charts. We now have new notes on all of them. So yeah, whenever you see me look at a chart, just make sure you read around the screen to see how you could play it. So yesterday, this was the idea. Just so everybody can understand. Yesterday, my idea was we bought calls down here at the bottom. And we had a 300% trade straight to the top up here. Now today we're up here. And we want to simply just fall down a little bit. About, you could say, the halfway point of yesterday's range. So remember, this is my idea. That's not the actual range. The actual range was about right here, $5.13. So for today, what I want to see is basically something like this. Something along the lines of that. And then after we get that drop down here, we'll see if it's just going to consolidate around, the bottoms. Or we'll see if you're just going to start to run up to the high again. Potentially. Right? How much were these puts yesterday for Tesla? Or these calls? These calls for Tesla yesterday were $600. Right now they're at $10. That's the one we bought. It was $600 yesterday. Today is $10. The reason why we bought the calls on Tesla, by the way, let me show you once again. So when you first opened up today, you were at one of the wedges. And now you basically fell to the bigger wedge. So the more important wedge is where you fell to right now. This was the more extreme one. So now since you're down here, since you didn't hit the top perfectly, in fact, you didn't hit the top good at all, to be honest with you. I'm thinking now you're just going to get bought up and sent to like right around here, 320 today. And then we could sell out of this option for probably around, if you run to 320, that's 1, 2, 3, 4, 5, 6, 7, 8. 8 strike prices. So this is going to go to 1, 2, 3, 4, 5, 6, 7, 8. We should be able to sell out for like 100 to 300% on this Tesla option. 100 to 300%. And then on the SPY option, I want to sell out for around, my first main thought, honestly, is to sell this option at around maybe, let me think, 400%. So yeah, 3 to 400%. Same thing as yesterday. And then we'll see if we can get the 1000% right after. First, we're going to wait for this to drop, though. If it just runs up to 536, of course, just wait for it to get above the pre-market high. Once it gets above the pre-market high, which is 635.04, you can continue to play calls going up to 636. So remember that, everybody. Wait for it to go higher than the pre-market high, because that's going to be above number 1. And then you could play calls to number 2, which is 636. You can also buy the same puts around this point. The puts that I'm waiting to buy once we get up to the top here are going to be the 633s or 632s. Those are the puts that I actually really want. However, we're just going to hop into another play as well, just in case, so we don't miss out. And then when we bought this option, I think it was right at the top right here. So 633. Let's see. Let's go ahead and put a circle by it. So it was filled at 634 right here. So this is where our put was filled. So far you fell below number 1, but you're not able to hit number 1 to the top side. Let's see here. Right around 634.60. Yeah, so I have it right by the opening price. I just got to fix it a tiny bit. Just like that. There you go. Hit number 1, ran up, went down below number 1, ran up higher. Now you're at a new high of the day. If you can't hit this number 1 and you fall right now, everybody, I'm just letting you know again that's being more bearish than bullish. We simply want to see if that's going to be the case here, or if you're just going to run up to number 4 on the top side. So again, once you get above number 1, which is... Okay, so now you can start looking at the calls here. Remember, calls, you want to make sure your calls are extremely close. 636 is the level you want to play to, just due to the fact that we've been crashing from a 4 or from a 6. We're waiting for this to hit 636, and then we're going to buy another put. Remember, this is when we buy the 633 put or 632 put. We want to see this fall from basically up here, 636, straight down to 633. If not, we'll see if the first put play kicks some more value in. So far, we were up only 40% on this one. But again, we're still looking for that 200 to 400% trade. So that's when I'm thinking this trade up here is going to make up for it. We'll be able to claim back the lost profit as well as the loss from the contract, and then just go with a better contract. So it's perfect. All right. We'll give this a second here. Remember, the calls you're looking for are 636, just because that's the next area you need to run into. If it just gets below 635.10 and you go below number 1 again, remember, you're doing an equal reaction right now. So now you're doing a perfect equal reaction. You could still turn bullish today. We just might have to see if it's going to fall down to the EMAs first here. And hold on the EMAs and then start running up higher. How much of an increase is that? That's so far $1.30. Let's see if I'm going to be correct about this. We might just drop out the sky here. Usually when you only do $1.30 up or down, the whole entire day could be a continuation of a staircase, meaning the whole entire day could staircase down, because we just ran up $1.30. So again, now we're thinking we're gonna fall down around $3 to $4 here. It's one of the other trends we developed, kind of like the ghost touch. It's a pattern that we've been able to find. Remember, when you hit number 1 here, you could buy a call. The calls that you want to buy are 636, which cost around, you could buy a 637, cost around $24 instead of the $50 one, right? It's a little bit cheaper, and you're still going to get some good value from it. Or you could just play the aggressive side with everybody here, and you can go for a 632 option for around $24 here. You could do that as well. Let me check in video. Yeah, we might trade Nvidia next. Nvidia looks pretty good. Okay, we're just gonna give this a second. Again, everybody, we went long on Tesla right here. So far, you're running up pretty nicely. We're gonna sell this option out tomorrow at around 330 to potentially 320, somewhere around the midpoint. If you run up to 330, 340, and you just go straight to the top again, I'm just letting you guys know you might go much, much higher. You might end up running to like 380, 400. We'll see what the first flip looks like. We'll just wait for it. Yeah, this was very extreme. You hit that yellow line, so potentially you hit the green line. You do equal reaction straight up to 362, potentially. Yeah. You might even 372. That would be crazy if this thing flips up like that tomorrow. Again, everybody, since SPY did $1.30 upwards, I want you to write it down on the screen. Actually, I'm going to write it down on my screen too, because I don't have it on none of my charts. So now from here on out, we're going to have this every single day. This is the new note. Today's first note. It's going to be basically, let me see if I could make this an easy short little response. Okay, $1.30 at, so no, the first $1.30 move could result in okay, so basically what I wrote right here was the first $1.30 move could result in a staircase in the opposite direction for the rest of the day. Excellent. Actually, I'm gonna do. Excellent. So now let me go here and change the color to white. Excellent. Okay. Oh wait, I didn't anchor it down. Excellent. Okay. Control copy. Control paste. Tell me how I had a dream, like right before I woke up, a couple minutes right before. And apparently I don't even know where the hell I was at. I was in some hotel room and then the dude comes up to the door and he's like, yo, you know what you did to your car last night, huh? And I'm like, what is he talking about? So like my heart dropped on my ass because I'm just like, did I hit it or something? And now he shows me the video, and nothing happened. It wasn't even my car. It was just so random. I thought I saw a $7,000 mistake. He showed me like a receipt with $7,000 like due, and I was just like, what is this? SPY is being a little stingy today. We know what's gonna happen to you, SPY. We're all waiting patiently. Like a group of seagulls just waiting for somebody to throw a piece of bread. Everybody's perched. Let's see. 633.46. By the way, let's copy this on all charts before I forget. Excellent. We just stuffed it in the corner there. Perfect. I gotta move some stuff around here and there, but that's all good. At least it looks really good. Oh, I want to check this chart. This is the chart that I wanted to really check. Wait a second, why don't I have this here? Oh no, I do. Okay. So this is what I was looking at this morning. Every single time you run above a blue box for the first time, you always hit the quarter point around like this first 634 point. Sometimes you go next to the midpoint, so like somewhere around this area here, and you always fall back down to the blue box. Take for example over here, right? You ran a little bit above 624, 626, then you collapse down. Look at over here. You ran to 616, which is a little bit above the first point. Then you collapse straight down. Look at this point over here. You ran to 606, which is exactly or a little bit above this point again. I think you guys get the point here. It's basically every single time you run above the blue line, you run to the quarter point and you fall down on top of it. Sometimes it takes a day, sometimes 2 days. So if we're unlucky, it's going to take another day. If the flow isn't going in our direction and the flow changes today, did you leave out of the stream and then join back, Miss Michelle? There we go. What is this? Those designs, yo, those designs on those knives look wavy. Nah, yeah, that looks nice. That orange looks crazy. So, John, what was the idea for the NVIDIA call? Wait a second. How much is this? I just noticed something. By the way, you hit your 3-month put area. So everybody that wants to buy puts 3 months out, you finally hit the first location where you could do so. And you guys know the drill. What is the drill per se? The drill is once you make a new high, you could then take the new range, take that box. We're waiting for this market to fall down to 630 flat. Once we fall down to 630 flat, we'll see if it holds. We're going to sell out of the puts around this point and then buy into a call automatically for around $5 to $10, which is just a fraction of the gains, right? It's only going to be 5% of our winnings. Instantly throw it in just in case you flip up right away. If you continue to fall, perfect. Let's see if this thing falls down to 626. You could fall down here today, straight down to 626. So let's see. We already have our puts. We're patiently waiting. Let's now go check the smaller SPY charts now that we went over everything and we reviewed it with you. And let's see if our idea is working out so far. And as you can all see, I guess you could be the judge of the idea. So far, so good. It's really good right now, actually. If you guys bought those 632 puts at the top, you should be massively up right now. So again, congratulations because you were patient, you waited, which is what I want everybody to start learning how to do every single day. Is just be patient. If you're going to get into a trade, just a very low amount so you could test the flow, just like how I did in the morning there. If you're going to get something more expensive, wait till you hit reversal point number 1 or 2, and then you can start doing something else, right? But until you hit another reversal point, you shouldn't be doing nothing, you know? You should just be waiting. So how much of a move did we do upwards now? $1.30 still, so let's see. We might do a staircase all day to the downside now. I'm just waiting for this to hit the 200 moving average first, which is right next to us. Once we hit that, we'll see if we can get another good gain on these trades. How's your guys' put so far? And remember, this is my first idea before the market even opened up. That was the first plan. My bad. Say that again, Meech. Oh, it's just a mic. No, you're good. You're good. I could tell. Am I breaking Weeble? What is happening now? It's not working. Oh my god, what is happening? Are you okay? I don't think it's okay, everybody. Yeah, I think I broke this. Wait for program to respond. Oh god. Well, looks like we'll just look at it through over here. Also, did I fix these lines? Let me see something. What is even happening here? Let me see something real quick. Let me just group this. Why is this thing bugging out? Ah, okay, I see what happened. It's because I put it way too far to the left. I understand now. Okay. Oh yeah, that makes sense. That makes sense. My fault. I had to check this again because I had to fix this. It took like 3-4 hours the other day to fix this. Perfect. Let me zoom in now a little bit more. And just because I'm not trying to fix this in a couple weeks, I'm going to keep zooming in until I can't zoom in no more. There we go. at the lines at the quark level. There we go. Alright, so I gotta fix the green one. So I would never need to fix this line ever again because of how much I just zoomed in. It basically ensures it. So it's perfect. As long as we could just keep making sure we do that for the next couple months, we don't have to fix it again. Now let's see where the market's stuck on. Okay, so you're stuck on the top of the yellow. If you get below this yellow, you're falling out the sky 110,000%. If you get below this yellow line, that's so funny how the yellow zones are just right there. You see how you ran up and touched the orange one, then fell back to the yellow one? Just use that as confirmation to the downside, basically. If you get below the yellow line, if you just hold here, what you could see is basically you get up to the orange line. Once you get above the orange line, you could see us run all the way up to 636.95. 636.95. If we get above the orange line right there. This damn screen looks like a textbook. I'm like, why is there a big ass gap right there in the middle of the lines? See, I miss when my charts used to be this quick. Because I have so much stuff on the other charts. It moves so slow. It's insane. Okay, so you'll see what I'm fixing right now. This is one of our best charts as well. This one perfectly cross correlates with chart number 2 to provide you its opposite reaction in a way where chart 2 is like the yin and this is like the yang, if that makes sense. They kind of perfectly balance each other out. So that's the reason why now we're starting to use it a little bit more. Because this year has basically confirmed the balancing out. Because it did it last year. And now since you're doing it 2 years in a row. To me that confirms that, nah, yeah. It's exactly as we thought. Okay. As you can all see. Each yellow line has its purpose. It's a magnet point, and everything in between is quarter points and halfway points. So when you opened up this morning, you fell down to a quarter point, ran up to a quarter point, and now you're at the midpoint. Kind of makes sense. You haven't chosen the direction yet. So you could still either turn bullish or bearish today. If you turn bullish, you're definitely going to run up into this top area here, where you're most likely going to end up tanking from right here. You could see it fall right there. Somewhere from right here. And then if it falls down, cough cough, that's what I'm looking for right now, everybody. We're gonna buy some calls right down here, right above this red circle, and then we're gonna average down on the red circle. Okay, so this chart is set up, that chart's set up. Supply and demand zones. Did you make a new zone? Let's see. 15 minutes. We haven't had enough candles yet, so we'll give it a second. Reversal chart number 2, you're now approaching below that yellow line. On this random chart here, you basically did double the range, did you not? Yeah, you literally did double the range and then stopped. That's so funny. That's crazy. So you might only stop at 632. So we'll see. If anything, we could just wait for 632 and then we'll sell out. Instead of the 630s or the 631s, right? Let's see what Tesla's doing. Still stuck at the same level. Nvidia's still stuck there, same level. ES futures look like they're holding nicely, so we'll give it a moment. The Coinbase puts are doing absolutely insane. Tesla here. Did I ever have a line here? I don't know. I don't have a line here. Also, I fixed the Microsoft chart. I updated it. Hopefully we don't make a new high, so I had I had to update it again. But yeah, I have it updated now. So that would be your new midpoint. So Microsoft's probably going to fall down straight down to 429. That's what I'm looking for right now. 429. You're building up so much volume around here. Let's see. This might be a little crazier than I initially thought. Meaning the gains might be a little bit higher. If you're gonna sit there, don't touch nothing. Put your paws down. Trying to bite everything she sees. Alright, you're bugging now. You just fucking clawed my foot. Get out of here. Go over there. Okay, so you're on number 1 on the reversal points. Once again. Let's see if this time you can get above it and then run to 636. We're just going to patiently wait here. I think we already looked at all of our charts so far. Yeah, so we looked at everything for SPY. We could just start scouting the whole entire market now. Let's look at the target plays. TGT. As everybody can see, I told everybody to buy these target plays right around here. And you're massively in the sky. So we're going to give this another couple days here and see if it comes back down. It's just a slight little bit. Just a slight little bit. What in the world happened to this? Why did this run up so much? From 50 cents all the way up to $4? This is a real estate stock. Airbnb is also doing amazing. Let's check some of these plays over here. Come on, Unity, crash. Crash. Unity's about to start filling this gap to the downside, so I'm going to wait for that next. Nice little gap right there. Once Unity falls all the way to the 5-minute on the EMAs, I'm not too sure why mine are not showing. This thing is so stupid. There, you're gonna show now? Wow, of course. And now I gotta fix it. Trading view. We gotta love it. Okay, so we're gonna change this to pink. We're gonna change this to green. Change this to blue. Change this to purple. And we'll just leave it like that for now. So the 200 moving average is all the way down here at 23. That's the next area we're waiting for to get calls. If it falls below it, you're going to average down right here. AMD ran up from that bottom perfectly, as you could see. First, second, and third entry you hit. BABA's still running up as well, so we're still holding this. We bought it down here at the bottom. Roadblocks. I told everybody this is your first out. This is where it can get a little dangerous, so we're going to wait for this. We're not going to buy it right now. C, then you have Autodesk. And United Healthcare. Remember, everybody, I told you United Healthcare was going to crash lower, just like how it is right now. So our idea was perfectly correct. We said this when United Healthcare was around 320. Currently, as you can see, you're following the only arrow that I drew, right? And I purposely only drew this arrow to show you this is the only direction I thought you were going to go. Now, since you're down here, I still think you're going to go lower. Possibly till around, let's see where are my buying points. Definitely not going to fall that low. But you could probably fall low as 236 probably. So yeah, you could probably fall to 236. If you go lower than that, you might want to fall down to 160. 150. That would be insane. And then you would start bouncing up massively, most likely. following me. You gotta chill out. That's the chart we fixed, I think, yesterday. We're gonna skip semiconductors. I've been looking at them all week. I already have a headache looking at them. Let's look at some EV stocks. There's somebody holding Lucid puts, and he's holding a crazy amount. He or she. Let me show you guys something real quick. Can you please... Weeble, please work. I swear to God, if you crash and you didn't save nothing I loaded, no, I'm not closing you. I'm not closing this. I did like an hour of work on the charts here. Like I fixed them around and stuff, so if I close it, actually I'm just gonna close it. Who cares? I'll just do it again. Won't be the first time, right? So finally you're above number 1. This is a good sign, everybody. We'll see if you can get above the orange line now. Run straight to 636. And see if you can fall out the sky. Remember, please don't confuse short-term movement and daily movement with weekly, monthly, and yearly movement. Specifically, what I'm referring to right now as I speak is daily movement. Just make sure you understand that. Weekly moves are an entirely different idea. Monthlies, yearlies, they all have their own idea and their own levels. So that's kind of how I want you to think. Own ideas and own levels. Alright, it's saved. That's perfect. Oh no, it didn't. It only saved half of it. Ah, man. And no wonder this is here. Did this thing just eat the thing I added to it? What just happened? Okay, so what I was going to show you was this. You go here, open interest to the sky. Put your meter around 7,000. The delta to the sky, volume to the sky. Days to expire. Leave it around 16 to 13 days to 200. The volume, you're going to massively run it up. Put it around like 500. It's going to cause a lot less stocks to show up here. And then you're going to sort it by the highest open interest. And look at this, everybody. Somebody bought calls on the VIX for SPY to crash. They have 400,000 open interest. This is probably one of your most like volume intensive plays on the whole entire board here. Like this last night was not at 341k. Last night this was at 400k. So people have been selling this stock right here, HYG. I have no idea what that is. I was gonna search it up, but not yet. Knocked out. So open interest, as you can see, somebody's betting that the VIX is gonna run up. If the VIX runs up, that means SPY is gonna fall. So somebody just locked that in yesterday and it updated today. That's basically what happened. So yeah, I think we're going to tank from here. If you don't drop today, we're just going to play puts at the open tomorrow and at every single reversal point. The next yearly puts that we're going to buy is at 644, everybody. Please do not forget that. 644 is where you're going to buy your next yearly puts. We already listed them in the Discord server, so you just need to track down the SPY channel, and then you'll be able to see all the puts I listed from here all the way for the next 3-4 years. Some of those puts are 900 days out, 800 days, 500 days, 150 days, right? It ranges. Can I get a break? What does it say? Let's go ahead and look at the reversal points real quick. Let's see which one we're at. So we're almost at 2. We might average down on the first option as well, just because it's so cheap now. So again, we might add to the first option and then buy a whole new option. The puts that I'm looking at right now, let's see. Are 634 and 633 right now. So again, I'm looking at 634 and 633 puts. Just waiting for you to go a little bit higher. No, yeah, Fish. Yeah, just let me know whenever you're free, Fish, so we can go over some stuff. Wait a second. I never even thought about it like that. No wonder. This thing is still catapulting. It's just like it hasn't slowed down. This is absurd. So that's how much money is going into this one stock. And then look at the Chinese play. You went from 15 to 20 on Joby. You went from $5 to $18. So again, we haven't updated our charts on this in pretty much since June. So it's been about, yeah, like a month now. In terms of the next King's Points levels, it's pretty much going to be one of them right around here. One of them is going to be right around here. Is this one correct? This one is correct, but there's actually a smaller one here. So that goes there. I can also put one right on top of there again. Yeah, that's perfect. And then the next one is going to be right here. then that's pretty much it. Then you have the bigger red one and then the green one down here, which is when we're going to buy into it again once you fall out the sky, however long that takes. We'll keep tuning back into this a couple months away from now. Aqua Metals is absolutely terrible. It's a battery recycling company that I used to watch. EVGO. This is another battery company, I think. I could be wrong though. I think these are all batteries. Yeah, they are. This battery company is actually at the low, everybody. You hit $9, you're at 18. See if it could fall to 15. And then we could potentially buy into it for a run right back up to the next high, which would be somewhere like this, you could say. Either at 31, and it might fall back down again. Or this is just straight up going to run into 43, 42. Right around here. And then collapse. I actually have the arrows there, I just noticed. So yeah, it looks like we pointed out all the main points. So that would be the next one up here. Maybe you drop down to this. And remember, this is like extremely bullish. But again, you've never seen this company fall down like this. Ever since it IPO'd, you could say. As you can see, look, it was just tanking this whole IPO. Runs into the sky massively. Straight up to $100. All the way from $3, $4, which is insane, right? And then you fall right back down to $9. Of course, now you're at 18, so the multiple is a little bit higher. So it's kind of unfortunate. But, I mean, that's all good. Oh, what's going on, Meech? you just get life out of me. I was like, where did that noise just come from? Alright, so and then you have a nice little downtrend here that I never pointed out, I guess. We could draw that now. So look, this will be the downtrend, right? The one thing I want you to notice is, do you see how the last line would have been something like this here? And you see how it passed through it and then went below it and then now you're above it again? This is the same thing that the Forex market does. So whenever I started learning how to trade Forex, I started realizing that it always just messes around the previous highs and lows. So all you really want to do is wait for it to hit a low like here, have a range, and then just buy at the low. And if it falls out continuously, just sell for a little loss. It's not going to be a giant loss because the contracts you're going to buy are going to be for like maybe a day out, 2 days out, 3 days out. So just because, let's just say SPY's at a current red line, right? So let's look at SPY. Let me give you an example with SPY, since SPY is the main focus. Let's say you're at this line here, this orange line right down here, and you fall below it from where you're currently at. That's basically a 40 cent drop, 40 cents to like 35 cent drop. In terms of options, they're a day out, 2 days out, 3 days out. Of course, the ones that are a day out, they're going to move about 15% in that period. If you have something 2 days out, 3 days out, it's only going to move about 5 to 10%. So that's why, again, having the 5-day, 10-day contracts, it always comes into play, because you usually could just wait 30 minutes. And if it's going the opposite direction, I mean, yeah, you could just sell out for like minus 5%, minus 3%. Sometimes I do that. And if I basically take minus 15%, so let's say if I buy a SPY option and I sell out at minus 5%, I give myself 3 tries. So whenever I give myself the first try and I fail it and I sell out, you know, I take the loss, I then set a little timer for myself. That timer is usually 30 minutes. So if you guys want to kind of listen to some good advice here. Anytime you get sold out of something that you put a stop loss for because you were scared about it, you could hop back in, but in only 30 minutes. You have to wait at least 30 minutes. 25 minutes maybe, but 30 minutes usually. Because then, after 30 minutes, you're going to be able to see if the trends are actually going to break. Usually it takes around that time, especially if you're investing around... well, you're not really even investing. You're pretty much just trading. You're day trading, in fact. So when you're day trading around like 11 to like 2 or 3, you kind of want to look out for that. So again, use the stuff on my screen as confirmation. Copy and paste it to your screen. There's many charts. So whenever you see a chart on my screen, you instantly pause what you're doing and you take a picture so that you could zoom in, because I know the text is really tiny, but this is the only way I can have everything that one truly needs. Imagine that. I don't need to go on the Discord. I don't need to go on any books that I've, written. I don't need to go on my notes on my iPhone. I don't need to do nothing. It's all on the screen all the time. And it's... Did you guys hear that? I don't know if you guys heard that noise. That's crazy. It sounded like the whole entire house just got electrocuted. Alright, so we're still waiting for this. If you shift below the low or the high, the last high that we had, which is 635, remember, you're at 635.89. 11 more cents and we're finally at 636, where we could finally fall out the sky. We got in at the first entry, which was 634. The reason why that's the case is because last year, whenever we would trade and you would run into a new high, the 4 was always the main priority. So all we're doing right now is using the 4 and the 6. The 6 is the new one that you started to crash from the last 3 months. For example, if I go to this chart here and I hide everything, I think we already went through this little example a bunch of times already, but let me show you. 626 up here, you fall right down. Everybody sees that, right? Look over here, 606, you collapse down the next couple days. Look over here, 596, and then you collapse down right over here. And I don't know if over here you were following it still. Let me see. So over here it was a 568. You did hit a 566 before I guess you went lower. You hit a 568, fell down, ran up to 550 or 566, and then you fell down here again. How about over here? Yeah, it's like right next to 556. It was actually 555. But again, that's right next to it. And then look over here. That's kind of funny. It's like in between 4 and 6 now. And then it started shifting into the 6 when you started running up towards the highs. Right here, 545. Then you crash down about... How much is that? That's about $12 right there in a single day. Over here, 646. So again, that's very funny. How about this one? Yeah, 625. See? It's the same time. Same thing every time. Every single high was literally the same thing. I kid you not. So 4, 5, and 6 is where you crash from every single time when you run up into a new high. So let's just give this a moment here. The next options we're going to get into are a 5, not a 5, but a 634. That's the next put we're going to buy into, everybody. A 634 put. This is the first time you've fallen on top of the EMAs on the 5-minute. Expect it to hit the pink one and then start bouncing up to a new high. So if you guys want to get some calls right now, you could potentially actually play the call side real quick. You can get a 637 for around $15-16 here. Actually, no, it's around 20 right now. So you can get it for around $20 here. Remember, once it makes a new high, you're just going to sell out of the call. Just in case. And if the market just tanks out the sky, it's okay. Again, we still have the first put. Right now, we're just waiting for this market to choose its main location before it wants to fall. We're thinking it's going to go below the 200. And probably a little bit lower than it. Probably fall into around 632, 633. That's still the main level as of right now. It's only 90 cents. $1.30. I mean, that is kind of funny. They're doing $1.30 from open. What time is it? 11 o'clock. Yeah, so today's a very slow day so far. Very slow. The only reason why I'm saying that is just due to what you're hitting on the trends. Plus that right there, that's going to equal 50, 60 cents. So it's around 2. So yeah, that means 3 is going to be right around 636.40, 636.30, around that level. Okay, so your 637 calls are now up 10% here. Let's see if you can run up a little bit higher. If you just fall right back below the pink line, you're just going to market fill and sell out. That is not what we want to see right now. Remember that. We want to see you hold and then run straight into a new high where you're going to sell out the call. That's going to be your first demonstration of the EMA moving average trades. This is what you could do every single day, pretty much. It's just you always have to, be very careful. Sometimes you also want to get a contract that's like one strike out from being in the money. Because this contract is up like 15% now. Actually, no, it's still around 8. The other contract, the 535s, were around, let me see. There you go. Now I can see it. Yeah, these are dropping right back down. So they were at a low of 104. They hit a high of 116. So yeah, you were up around 11% on those. Still holding the pink line here. If you drop below it, you're just going to market fill. Remember that. All right, everybody. So the next thing I want to do here for fun is let's go to the flow chart real quick, which is this one. And let's actually look at every single time you hit a high and fell, what that day consisted of. Let's see how much you ran up this day here. $3.84. Then you crash down. So the day of the high before you crashed. This one I can't even count that. But then again, we had to count it because it's the high. So we're gonna have to count both of them. That was $7 that day. Straight down. With the high included in the pre-market. So it's not like today. It's a little different. What about over here? That one's just ridiculous. I'm going to the left. I still remember that day. When this day occurred, I told everybody, I was just like, all right, we're just going to buy another 5-day option below the 200. Because it looks like it's just going to run right back into those highs. Because those individuals who couldn't sell here because the market wasn't open. So, of course, they couldn't sell their options. They're going to get an opportunity. And yeah, it for sure gave them one. It's crazy. Like I said, the market's been very, very, very bullish. It is going to start snapping soon. The one way where you can actually tell before we actually continue this little experiment, it's better for me to actually show you why on a whole new chart. Let's go create a new layout. Why? Give me 1 second. This is just so I can remember. I gotta be just simple. Why SPY will. I'm also typing with my pinky right now. Okay, so everybody's watching. Make sure you're watching. Keep your eyes peeled. First off, let me turn off the volume at the bottom here. I don't like looking at that. It just makes the screen all messy. Also, you could go to the top right here and turn off bar values. And then go into your settings. Usually this is what the tickers look like at the top left. But listen, you don't really need all this information here. You want your charts to be really clean so you can add some text and some nice information to it. So you're going to click this and just go to ticker. Again, all I did to open up this screen here was I went to the top right, top left actually, my fault. You right click it and then the settings icon pops up right there. Usually this is also on as well. So you see how this is like right there. So watch my screen right here. When I turn it off, watch what happens. It just goes away right there. You don't really need none of that. I wish I could just take off the high, low, and all this stuff and just leave the opening price. Because that's really the only thing I need. But, nah, yeah, it's fine. And then you also want to take off the buy and sell button. So usually the buy and sell button is, it looks like that. The green, not the green one. The blue and red one. Click it. Take it off. And then there you go. Now your chart looks really clean. Okay, the first thing you're going to do now, let's go all the way to the bottom. Oh, by the way, let me show you where this tool is at. Go here to lines, add the parallel channels tool and favorite it. Make sure it's on your favorites toolbar here. After that's the case, go to the bottom. We'll fact check it after to make sure that's the bottom. And then I'm just going to glide this line straight up. And I'm going to hit that first low that we had when we fell right back down. So I'm going to show you. Watch, right? And then you're going to put this at the top. So this right here automatically told me the SPY was changing directions. So when you actually gapped up here and you did this right here is not something you normally want to see, because that means that you're basically changing directions. You're now falling out of that trajectory, which was from this line, that line, to that line up there at the top. Right, everybody? So again, I'm going to delete the line, and I'm going to make it again, just to show you it's the same thing. Put your magnet tool on. Make sure I zoom in here for a second. Click the bottom. And remember, you're going for this low right there. The reason why I'm going so far with my line is because I have the magnet tool on. So as you can see, if I have my cursor here, it just keeps snapping to the price action. It's not until I go off the price action where it goes to my cursor. So that's how I know that I should stop just placing the line there. I don't know, it's maybe it's ADHD or something. I can't explain it. Let me see. So like right there looks perfect. And then I'm just gonna go to the top of that green line right there. It's not perfect, so let me go fix it. Let me grab the middle. Boom, right there at the top. So because of those 3 points, again, just because of these 3 points, which you had, you know, weeks prior, you basically had all this price action in between. So this is one of the ways that I basically show individuals how to chart. It's on the longer term, right? Now, what do you do when the market has a low like this, but it snaps back into the price action? Well, I'm pretty sure you guessed it. And this is the craziest reality, is that if you click that same low, I think I had to fix that. I saw it snap up for a second right there. Yeah, it did. There you go. So now go to that same low, that new low, from like right here, that second low. Put a line at the bottom of it, right? And then go to that same first high. It's a little messed up. Let me zoom in. Once again, everybody, do you see how it fell out of this other box? So I'm going to change this one to yellow, and then I'm going to change this one to specifically blue, so it stands out. You see how it fell out the yellow lines, and then it fell into the blue lines, and then it was pretty much on the blue back and forth with the yellow. So this is how my charts look the whole entire time. And remember, I had these charts done. I basically seen all of this in advance before this even happened. All the way from back here, from April, I already seen what was going to happen in June and July. And that's why I was telling individuals to buy calls for June through September. I told everybody at the bottom down here, you're going to buy September, June, July, and December contracts, so 4 different months. The strike prices are going to be 580, 590, 605, 620, and then 640. And then the one for December was going to be 680. That's the one for December. So December was going to be the furthest one. But right now, do you guys want to see what those contracts are at? Look how crazy this is. Because you still have a bunch of time left till December happens. And then we're going to go back to our little example. I just want to show you how we used the information that I'm showing you how to create right now. We used it to actually trade properly and make some capital. And not just make some capital. Just wait. I'm going to show you right now. I'm going to show you right now. All right. So let me see. Was it these? It's either these or the next week. Yeah, so yeah. These are around $30 when you fell out the sky. They went straight to 300. And currently right now, they're around 760. Let me check the other week just to make sure, but I think it's those. I'm pretty sure it is. I thought it was more expensive though. If not, that might have been a different play. We just kept buying so many different things at the bottom. Kind of like how we're buying so many puts right now. A lot of people that were watching, they just got sick and tired of it. So they just pretty much just kind of tuned out the market. But no, we just kept buying calls at the bottom. And eventually when you flip massively, yeah, it was insanely rewarding. Let me see, 680s. Let me just check. Give me 1 second. I was trying to not have to go check real quick. I also, oh, I see now. I also got a September 680. So that was the first one I posted when we were buying puts at the bottom. So again, everybody, this was the first one that I had posted when we were at the bottom. We bought this for around 20 something. And so far the high was 160. So that's around, what is that, times 6? Times 7? 700%. So it's not bad. That one was pretty good. It's just that was the strike price was just too far. So then we just turned around and was just like, all right, we're just gonna buy another one. And then we bought a 630. Then again, that already expired. So yeah, that was already expired. We already sold that one. The September one we also got rid of before. And then what was this one? Yeah, a December 19th 680 call for $60. So December 19th, let's go check it real quick. December 19th, 2025. It was a 680 call, and we paid $60 for it. So yeah, we didn't pay the $20 initially. I think we paid somewhere around here. Yeah, that's what it was. No wonder. Because we started buying them on the 17th. Let me show you what the 17th was like. Pretty much right here, as you can see. You see how you fell from the sky here? So what we did was, I told everybody to buy contracts here. And because we were worried this market was going to fall out the sky again, what I had everybody do was literally just trade 0-day options every single day. Throw money into the call side automatically as soon as the day opens, and then wait for a certain reversal point to then hop back into another play to make that money back off just like a quick little scalp. And we had a $10 option right here, and that thing was at $600-700 up here, because you ran up like $40 in a single day. As you guys can see, 490 all the way up to 530, 548. And then we knew that the 548 level was an important level that you were going to fall from. So as soon as you hit 546, I told everybody buy puts. And then this $4 account went from $4 down here. Actually, no, over here was $4 on the 7th. Over here by the 9th, it was already at, I think, 300. And then when you basically blew up into the sky because we had some leaps, we were literally at $1,000. So we went from $4 right here on the 7th, and then by the 9th. So yeah, within 2 days, we went from $4 to around $900. Because I remember we sold out for a little bit less than 1,000 because we didn't sell out at the peak. We lost a little bit of profit. So yeah, it was around like 960, 950, 940, somewhere around there. And then we instantly dropped the account right back to $10. pretty much. And then the market just got really slow, so then it was just a little bit more annoying. All the price action was just getting killed. And then once you fell down to here again, which was around the 509s, we once again went long on SPY. And that's when we got the 680s. So again, those contracts right now are $600, if you guys saw that. Let me show you. $600 each of them right now. And remember, they were only $60. So I'm telling you guys, you don't need a lot of money. If you need to trade and you need to make money and your focus is actually changing your life, I mean, it should happen within 3 months, 2 months, you know, maybe 1 to 2 months of research without trading your real money, just paper trading, trying to come up with the best strategy, trying to always enter into trades that are highly probable, right? Like, for instance, the first trade we did today, that was more of a riskier trade. Let's go back to the SPY chart to show you. So again, this was more of a riskier trade. The one better trade, so when I do my notes for today, and I'm showing everybody on the Discord where I bought, where I sold, when I do my notes, the first thing I'm going to tell everybody is we bought at 933 because we wanted this market to collapse, you know, straight right back down to the low. Now, because the market's so overbought and because you're at a level where you're supposed to fall, in all honesty, that was a really good point to buy. However, because we have our reversal points, and our reversal points are always the best thing to work with, we could have just bought those puts right here on number 1 and saved ourselves some headache, because we would have been up massively right here. We would have been up 100% right here. Right here, we were only up around 40%, which is why we didn't sell. Right here, we would have been up 100%. We would have sold right here. So, because of that one little situation, tomorrow, all I'm going to do is write that down. Or not really tomorrow, but today. Write that down. We're going to buy from number 1 tomorrow, at least. We're not going to wait for anything else. So, if we're going to buy a put, you're not going to buy at open. You're going to wait for it to hit number 1. If you're going to buy a call, you're not going to buy at open. You're going to wait for it to hit number 1. Because that would have worked out as well. So it's these little notes that you keep adding up over time where your style of trading becomes basically impeccable. There's no failure points. Just like how this one basically has no failure points at this point. There's like a bunch of lines going everywhere across the screen, I know. But there's a reason for it. They're all very important lines. That's the reason why you got above, or you fell on the orange, so the yellow ran above the orange. Now you're giving yourself a double point of confirmation for more calls. And boom. You can see this explode a little bit higher. Straight into a new high. Because again, when you hit the pink line, you did not go up. When you hit the green line, you did not go up. It didn't go up until it wanted to hit the orange line. And the blue line. They're kind of both perfectly right next to each other. So the conclusion that we could draw from that is that if this gets above this white line here, you might just run all the way up to the pink line, all the way up at the top here. So if you guys got some calls, maybe you're going to sell one of them at number 2 so that you could buy those puts that I'm going to buy. And then you hold one runner just in case it goes up to the pink line. Again, this becomes a little dicey because I wouldn't want you to have too many contracts. Just have one runner, right? $20, $15, $10. Because you need to be able to throw in basically the same amount of money to the opposite direction to be able to at least scalp a little trade so that you can get your money back. So whenever you have a loss, truly, as long as you're actually following it along and you're waiting for it to hit certain points for you to get the puts or to play with that direction, like to play into the direction that it's running. So let's say you buy a put at 560, right? And I know it's 560, we're at 600, but again, it's an example. Let's say you buy a put at 560. If you run to 561 and then fall down to 560.80, your puts are basically going to be down because, again, you're still higher than where you bought the puts. But at least if you know that that's a point where the market's going to hold, you would buy a call where it could potentially run up into a new high, basically. So that's all I'm trying to say. It's like a pretty simple idea, honestly. Okay, so the next thing I want us to kind of focus on here is we're going to wait for this to actually bounce up to number 2. And then we'll see if this is going to hit the pink line. Once you hit number 2, I'm going to instantly hop into a 634 option. We might even be able to hop into a 635 because the puts are getting really cheap right now. We'll give it a second though. Give it just a moment. Okay, so let's go back to the little example that we were doing a couple seconds ago. This example right here, everybody. All right, so you get the point. New low, new low. So of course, you're just going to draw a new low. And here's the beautiful part. When you draw a new low with the current low, you can actually fully understand why the market's still holding right now. So this is currently the line that I have on most charts. I'll actually turn down the opacity on this one. We'll color it orange, so you have yellow, orange, and then this one right here is going to be like a light green. So you can kind of see the colors. The orange kind of matches with the yellow, so let me change that to... Let me just change that to red for now. Why is the color so, like, tuned out? That's why. I gotta go here and do this. Yeah. But that looks kind of terrible. Okay, you get the point. You have yellow, then you have red, which is the second one. Then you have green, which is the next one. And you're already breaking it again. So now, what I noticed was every single time you were inside of one of these lines, let me turn them off real quick, right? So anytime you were in that yellow line, what's the one pattern that you noticed? It created a wedge, right? So boom, you have a nice beautiful wedge here. You created a couple actually. So one right here, right, where you then gapped up above it and held. Then you created another one right over here, where again you held on it, fell down, then you got above it and held on it again, just like how you held on this one here. Exactly what the Forex market does. Just creates these wedges like going into the future, and then you're listening to them instantly. And as you can see, you're still listening to it. The trends are kind of turning, like they're getting better. They're holding. It's not like disappearing out of nowhere per se, right? Still looks pretty good. Let me actually just copy this line so they all have the same starting point, because I'm just changing the other end of it. And then look, you have another high here, which this one's pretty good because you actually end up following it still after. And then do it once more, everybody. And then boom. As you can see, you were listening to that one. Once you fell below this one, you basically just held it the whole entire time until you continue to fall down even lower. Now, let's say if I grab all this and I grab this one and I put this into a group, that's group one, right? Let me hide it now. And now I'm going to turn on the red lines. And I'm going to do the exact same thing. And you'll understand why after. But again, do the same exact thing. So just go to the highs, put the lines. I'll change the color to like a pinkish color after. So it kind of follows the pattern here. And then let me do the last one real quick. Let me try to speed through this for y'all. Okay. Let's do the next one. Okay. So let me show you the point that I'm trying to make. This all led into this. So now if you turn on all these lines, right? Where did my lines? Where did my lines just go? See, that's crazy. It's crazy how perfect it is. And then turn on the last one. Yeah, that's wild. So again, you guys saw that, right? I had every single line off, all the charts off. All the lines were off when I was making each one. So I couldn't see the prior one if I was making the yellow one. Let me turn on the red one real quick just so you can understand, because you might not be seeing what I'm seeing right now. If I turn off the yellow one now, look at the red lines, and then look what happens when I turn the yellow one on. They're basically almost perfect. Like literally almost perfect, right? Look what happens when I turn on the green one. It's even more perfect. It fully aligns with the red one now. So the point that I'm trying to make here is, with these lines from before, if you just simply did the little ones, you always have the future price action in terms of how it's going to follow these zones here. So you see as it's cycling between yellow, red, and green, you basically can tell how it's cycling. Now, this is the last thing I want you to do here, is go to the green one, go to the top of it, which is up here, select the top of it, and I'll hide everything after so you can see how I just did that. And then you're going to follow this along the new high. So now let me turn everything else off so you can understand what I just did. So again, I put a line from up here. Let me change the line to a different color. I'm going to change it to an orange line. I made it hit the top. It's not at the perfect top up here like over here. However, this was one of the last highs before you started diving off the mountain. So boom, click that high. Click this high because that's the last high you had from the 3rd of July. So this time, if we can actually get above this orange line, if this can truly actually happen, I could see the market running up into the sky. I could probably see it running up into 660s, 640s. It's definitely going to do something insane. However, if it hits this area and does what it's been doing the last couple weeks, let me show you again. Look at the red lines. You basically consolidated and were mostly bearish, mostly negative, and mostly falling the next couple days after you went below the line. And then you started holding and going up higher. Turn off the red one. Look at the yellow one now, which is the first one. When you fell below the yellow line, again, you fell out the sky. So this is what we're looking for right now. Is just this same trend right there. Thank you for your attention, everybody. That's pretty much it. That's all I want to show you. So the green line is the most important one because that's the new one. That's the most recent one. There is a newer one now, I guess. So if I go like this and I copy the green one and I literally just go to the new low like that, that's pretty much what's occurring right now. But it's still so close that I'm just not even going to bother with that right now. I'm going to actually wait for it to fall. We're already playing puts right now anyways, so it's all right. If it doesn't happen, though, and you run above 639, 638, no, yeah, we're just going to continue to play calls. 100%. We're going to play calls at 639 for you to run up into 641, 643. And then we're going to play puts at 641, 643, 644, 646. Same stuff. Same exact stuff. Let's go look at what SPY's doing now. So again, you held on the orange line, which was also the blue line at the time. Now you're potentially running up into a new high. Let's see, these options are getting really cheap for 634. I don't know why I always say 5. But 634 options are getting very cheap right now. Again, you're still stuck on 636. You have not hit 636 yet. I've been waiting for you to hit this thing all day. Come on. You know you want to do it. What's Tesla doing right now? Euro's consolidating. Yeah, Tesla's still stuck down here. So the game plan for tomorrow is just simply going to be to see if we can get some calls at the bottom and see if we could potentially have an additional run up tomorrow just to 320. They're going to be a little bit cheaper, so that's going to be a plus. We'll just wait for tomorrow. If it happens today, we still have the calls for 350, which is still pretty far. Don't get me wrong. However, we're not looking for this to go in the money. We're just simply looking to collect a little profit. That's all. The space companies are still doing amazing. Remember, we told everybody to short Coinbase all the way up here at the top at 430. Currently, you're at 390. If you could run up again and potentially touch like 420, if not like 404, 412, anywhere above 400, you could potentially buy a put for you to fall down to 200 by December. Let me see how much they cost. Let me see how much they cost right now. Also, I gotta take off that sound. So December puts, December, not 2026, 2025. Yeah. Puts for $200 are around $300 right now. At the high, they were around $240. So they only went up around $60, $70 right now, which is not that bad. And again, it's for right here, which is the 230s. And most importantly, this bottom line down here, which is 202, 200 flat. And again, if you look at my chart, when does this say that you're going to hit it? By January, right? So between December and January, that's where you're going to fall at the low on all the crypto stocks. It happened last year in terms of when you were actually falling around February time. So you ran up in February, then fell down, and then we told everybody last year that the main thing you want to be doing with these crypto stocks is waiting for September of 2024. And the reason why I knew the market was going to run, you know, kind of like starting September or around the September period. So as you can see, September was the low. So again, we bought into all the crypto stuff around September. And the only reason why I did this was because of 2017. That's the only reason. I then went back to 2014 and it was the same exact trend. I have a chart that I could show you, but if I show you the chart, everybody's just going to probably just be like, nah, yeah, this is nonsense. It's a crazy, actually, you know what? Let me show you. It's actually a really crazy chart. I don't think I haven't showed this in a long time. So this chart right here was basically me going all the way back to 2017. Some of them go back to 2024. It's just I deleted the half that connects it down here because it was just extending like crazy outside. But as you can see, this is basically every single possible trend that Bitcoin could follow. And if you look at my lines and pay attention to where they're actually at, you're going to kind of find it really funny. But the same highs that you're currently at right now, I already timed. And I told everybody you're going to run into. As you can see, you're literally at the extreme portion of my my lines here. I had 4 different separate lines. I had the yellow one, which I have no idea where the rest of it went, but the yellow one is basically below the crazy line at the top, right? And the thing I want you to notice is pay attention to where I mark up and down, because me marking up and down is me copying basically a previous year in terms of what we did for that month. That's literally what I did, which is kind of crazy. So I went to 2014, 2017. I looked at exactly what you did that day, whether or not it was up or down, and I created a line for that day. It took me like 3 hours. And remember, if I tapped the screen by an accident and I clicked something wrong, I had to redo the whole thing. So I did this 4 different separate times. One was the low run, one was medium, or 2 were medium, and then one was the extreme top. And then after that, oh no, so this is the extreme one. I just didn't color it yellow, or I colored it white for some reason. I see it now. There's 1, 2 in here, and then 3, then 4. Yeah. So they're all still on my screen. And the one thing that we didn't get correct, to be completely honest with everybody, now that I'm noticing it, is the peaks. I told everybody the first peak was going to be in May 2025. It looks like the first peak was in January. So that's a couple months off. And then the second peak was supposed to be up here, which is in September. And it's already happening right now in July. So you could still run up into 130,000. But if you hit 130,000, you're going to fall all the way down to 74,000 within 6 months. So yeah, it's kind of in between the most extreme trend possible and the 2 middle trends, you could say. So at this point, yeah, I would be buying puts. A couple months out, and then in like a month or 2, buy another one if we're still running up to new highs. And then until then, you're just going to be using the short-term flow, short-term trends and ideas that I give you to make your money back so that you have more capital to buy more options. Because remember, you had to keep pouring liquid out of one cup into all the other cups continuously. If you stop for a second, all the other cups will become dry and eventually you will run out of capital. As long as you can keep one cup just consistently pouring profit into your pocket off of something that's easy and probable, like some of these SPY trades. Remember, the first trade we got into today, we were up 40%. The second trade that we could have gotten into today was up 100%. And so far from this third trade, there's no trade that we got into besides you holding on the line here and getting into a call. Also at the pink line. We talked about the pink line, and you did hold. You were up 10%, 5%, but then you did fall down a little bit lower, where we then told everybody, all right, you're going to wait for the orange line and the blue line. And as you can see, you held there, ran up. The only thing you're not doing that we want you to do is run up into a new high so that we could finally buy another put at number 2 here. So we're just going to give this a second and wait. If it just tanks out the sky, it's okay. We still have the first put from down here. But remember, we haven't averaged down on it. So let's actually check how much is down right now before you actually fall, so we can actually keep note of it. So remember, we were up 40% and now you're down 65%. So we were up 40, down 65. That means if the flow changes and you just automatically get some really bad pressure to the downside, I mean good pressure kind of, right? Because it's going to push it down. But again, that's for people who are playing puts. For people who are playing calls, it's going to be against their direction. So if you're looking for the downside, if you just ran up this high, you could potentially now go up around 160%. So without me even averaging down, my contract still might flip up to 160% green. It's kind of funny how the market just got so red right there for a second. As soon as I was bringing that up. So weird. But yeah, let's just give this a second, see if it holds here. Let's go look at something else. So yeah, you guys get the idea here. I think I tried to do it for Ethereum as well. Let's actually check this. Oh yeah, I tried to do it for Ethereum as well. I just didn't finish it, I could tell. This is like only one version. I would have to do like another 5 or 6. But yeah, this is pretty good. Think about it. The point of these lines is to basically show you where the price action could end up. So of course, how do you trade them? That's a whole different story. The point of them is that the market will touch them. And as you can see, look at how it's like perfectly holding on this line that's like running up here. Look at that line right there. Holds here, holds here. You fall right through it here. You almost hit it here. You hold over here on it. So it's kind of crazy, but these random lines that are coming in from a different, I mean, they're not really random. They're going from highs and lows. So they're very specific. But yeah, they mean a lot. They have a lot of value here. Oh yeah, this is when we were trading in February. I told this is one of my favorite plays that we got into all last year. We traded Mara, got into the Mara trade with, I think it was around $30. And that trade went all the way up to 2,000%. We got rid of it right beneath 1,000%. So yeah, we didn't claim the most, but it was still insane. The one thing that got me mad was at this point you were at 73,000 and you just stayed stuck here for weeks. So we just kept trying to buy puts, you could say, until here, until April, where I told everybody, I was just like, yeah, we're going to wait for September. And then we're going to buy the calls right around September, like the middle of September, and then hold them for, you could say, like May, January of 2025. Because remember, this was around May of 2024. So this is over a whole entire year ago. And as you can see, that's April. Wait, where the hell's September? September's right here. So September is right down here. That's August 5th. No, never mind. September's right here. So it's not the exact perfect low, but I think everybody would agree with me that that's a pretty good low. It's right next to the other lows. So pretty much one of the same things, right? But it's not the perfect lowest point. However, from that point, you just shot up into the sky. You shot up all year very quickly, way quicker than we thought. And again, you had that sell-off right here. So it's kind of funny, but you might get into a situation where the peak that you had last time looks kind of similar to this one, right? You had this little drop here, little drop right there, massive drop, massive run up to a higher point, massive drop, massive run up to a higher point. It's just this is a little bit high. This is way higher. So it's like you're kicking up some extra momentum here from out of nowhere. How much are the options down, by the way? I'm trying to take a nice picture if they're down like 80%. I love when that happens. Like when your options are down 80%, 70%, you don't average down at all. And because you're in the range, you go back to it like an hour or two later, and the thing is up 100%. It happens more so with options that are 5 days out. Options that are 0 days, it doesn't happen that often, honestly. Usually you're yanking in one direction for a long time. Kind of like how you're doing it today. But yeah, we'll see what happens today. We'll see how it turns out. It might still perfectly fall in our favor. Also, I love how you didn't want to hit 536. So now if you actually fall right now and you hit 536 in like 2 days or a day from now, we can actually just get puts at that level again. So again, that might have benefited us. It just depends if you crash here. You're in between the purple and the blue, so you're right in the golden pocket right now, basically. The golden pocket is one of your most, I would say, chaotic trades. Sometimes it's not highly probable. Sometimes you just go right through the price action. Some days, because think about it. If yesterday was a consolidation day and today is very bearish, you're not going to really trend the same way. Would we all agree? It's going to be a little bit more red. You're going to yank down a little bit more in certain areas. You're going to, yank up in certain ways that you normally don't in a consolidation day. And it took me 2-3 years to actually notice that. But there's 5 different types of days. There's not millions of trends that occur in the market. That is completely false. So people who say that they have no idea what the market is doing, they just don't have enough experience. That's all that means. So here are the 5 different days. You ready for this? It's been on the screen the whole entire time, actually. And one of them, I'm going to skip the word. Actually, I'll say it in separate sentences because it just sounds weird when you say it together. But a bullish market is called a bull M. That's the name. So right now, this is like a bull M market. How do I know? Look at the reversal points. You see how you only hit one to the downside and you've been hanging above the upside this whole entire time? So let's say if I make a box for my trading style, right? And I go straight across the middle. That's the middle. That's the top. So that's the bottom. That's the top. This is the bullish side. This is the bearish side. This is where I want the SPY to basically fall into. I want it to fall right here on top of this yellow line right there. If it can occur right now, that would be beautiful. We would probably be up around 200%. Maybe only 150 now because we did an average down and you went up like minus 70, 80%. So we might only be up 60 to 100%, but we'll wait and see. However, the point that I'm trying to make here is a bull M market is you choosing upside and only upside. Meaning you're hanging towards the top. You're not really hitting the opening price no more. In the beginning of the day, it was not a bull M market. It was a bull and then with the letter C, right? Why C? Because it's bullish but consolidation. The next level is going to be just consolidation market, a CM market. That's days where it's just $1 to $3 rubber banding around the same level, is not going higher, not going lower. It's just stuck there the whole day. You open at a level and you close nearly at the same level is usually what occurs those days. So I can add some more information to this. After all this, I put this basically on the screen like 3 months ago. So now we have a little bit more experience with it in terms of us visually staring at the market all day. The next letter is going to be bear C, bearish consolidation, and then bear M. That's 5 different types of markets. Again, I'll simplify it so you can understand in one sentence. One market is bullish and extremely, fast at upside, basically. So it's just a bullish market. One of them is a bullish market and is consolidating, which means it's kind of like today. It's kind of like in the morning of today and then what you're doing right now, you're kind of going right back into a bull with a letter C on it. So that's a bullish consolidation market. So that's number 2. Number 3 is a consolidation market. Number 4 is a bearish and consolidation market. And number 5 is completely a bearish market. There's only 5 different types of markets ever. And then you narrow it down and you start understanding what each day does and what each day normally trends as. And eventually you get to the level that we're at over here, which is basically fully understanding how to play any market, no matter the day, no matter the time, no matter the year, no matter if it's bullish, no matter if it's bearish, because it's all the same thing in a certain way. Yes, if a market is running up $100, the bearishness when it steps in will be a lot different than a market falling down $100. So it is a little different. all bearishness, like let's say if you have a really bullish market, that bearishness is way different than the bearishness inside of a bearish market. So as long as you can separate that, which is what I noticed after trading a couple years, was that no, yeah, everything is very separated. It's very in its own way. So once you do separate it, you can then document it. You can then write down all the different trades and ideas and styles and concepts and whatnot. And then you'll be able to always find out where the extreme days can pop up from. Kind of like how today could be an extreme day to the downside. That's why I feel like they just gave you that weird price action in the morning. Well, but they've been doing it all week, honestly. Like the last 2-3 weeks has been terrible price action. So you haven't been able to trade that well. I mean, I don't blame you right now. Because right now this market is getting sent into the sky, then dropping down $16, $14 below, and then in 2 days, you're now $30 higher. Retail can't keep up with that, you know? So once the whales start to slow down a little bit, that's usually when we start making the most money, because the market's just range bounded. It's not really going up, it's not really going down. It's kind of like stuck in the same levels for like 10 days. And that is perfect because all of our trading styles, like down here, they rely on the price consolidating. So because you're not consolidating here, ooh, look at this, everybody. That's what I was waiting for. There we go. You got a new consolidation zone. Finally. So now you have one at 634. So if this falls below this supply and demand zone here, you could fall straight down to here, which is 631. The 200 also kind of matches up with it perfectly for now. So that would be kind of funny if you could fall straight down to the 200 on the 15-minute. Anything is still possible, you know. It's only 12 o'clock right now. And it looks like you basically just lost all your value. However, I could see you holding here. Look at this. I just noticed it. Look. If let's just say you used that low from over here with those highs. Fill this in. Change this to yellow. So like that's the uptrend that currently SPY was following. But then you have a downtrend here. Because of that red line right there. Go to the top. Boom. That's your downtrend. So that's your uptrend. That's your downtrend. If it falls below the downtrend, obviously it's becoming more bearish. If it holds here, it might switch into the bullishness. So at least you have a shield that you can use to your benefit right now, ladies and gentlemen. This random pink box out of nowhere was basically my first idea when I got into my put over here. I want to see the market fall all the way down to here. Because you ran up to here, let's actually see something. If I take this box and put it at the high now, we can only fall down to 632 now. So at 632, I'm going to sell out of my option because, again, in my mind, I just wanted a $3 move in one direction. And that's when I'm going to sell out of my option. So far, I think the move to the upside wasn't even $3. Let's find the low. Let's find the high. Not yet. It was literally $1.90. That's terrible. You might actually do $3 straight down here. Now our options are only down 50%. We were down 80% at one point, 70, 80%. Remember, we're not averaging down at all on this one. At least not yet, until you hit number 2 to the top. If you ever do that, of course. In terms of anybody else that was playing the puts, let's look at some of the charts here and see why you would have gotten into some of the puts. So, of course, I have a red line right here that's literally on the same level right below the reversal point number 2. The reason why this line is here is because last year, you would run up right before the reversal points and then fall out the sky. So that's the reason why these lines are here. That's the reason why it's also red, because it's representing downside, right? Same thing with the ones down here. They're representing basically the bullishness, the upside. So it's kind of easy to follow if you remember it. We're only down 40% now. So now we're at the same location that we bought it from. And we're basically down 40%. If we had averaged down at the top, we would have been down only 15%. So again, we're down 40%. If we average down one time at the top, we would have been down 15%. If we average down 2 times at the top, we would have only been down around 4% to break even right now. I got an idea. Okay, perfect. All right. So now everybody can kind of understand what I was talking about. So obviously green is bullish, red is bearish, and yellow is consolidation. Actually, I'll make it orange. Let me see what that looks like. Yeah, it doesn't look that bad. Looks pretty good. There you go. So as you can see, when you're inside the yellow, the orange, it's consolidation. Risky business, basically. You don't really want to be trading it too much, right? When you're in the green, that's when you want to be getting the puts, as well as getting the calls if it's holding on the reversal points. If it smacks into one and falls, see if it's going to hit it again. Wait 5 minutes. Get into a put. Wait around an hour or two and see if it falls from that area, going right back down to the next reversal point. Just make sure that when you're buying options, it's around 10, 11, 12, 13, which is basically 1 o'clock, 2 o'clock, 3 o'clock, 2:30, 3:30, 1:30. Make sure it's all these important times. If not, what's also important is the times in between, every 15 minutes. So 9:45, 10 o'clock, 10:15, basically every 15 minutes. That's when you want to be buying and selling, right? So there you go, everybody. That was your little lesson for today. We'll keep this on this chart too. And in terms of this market here, this is again bullish. However, you are twisting and turning. So the one thing I want to look at is at the top, how does the trends look? And this orange line does not look that good. It's at a 20-degree angle, and that's pretty low compared to the first initial 35-degree angle that it was at. So SPY was at an angle of around 35 degrees, and now it's around 20. If that thing shifts to like 15 or 10, it's just going to snap down to basically an angle like this, which is minus 21 or minus 30. And I'm thinking you're going to go as steep as minus 35, especially if you ran up at an angle of 35. You're probably going to fall down at a degree of 35, something like that. That's probably how SPY is going to fall here. just because that's the same exact speed that you ran up with. So it's most likely going to have that speed falling down for at least a few levels before the speed dissipates. And this is what's the most important thing, because here's the thing. Where does the speed come from? So you can understand what this actually means here. This is all speed right here. So when you got half of this here, it was because of these levels up here. So if I make another zone, watch this. That was the previous high. And that was supposed to be the actual low. The reason why we knew the market was going to run up here, it was going to run up $40, $50. So we kept buying calls down here, and we were up basically from $4. Our account went to $900 to $1,000 within 2 days. The reason why that happened was because look at the midpoint. Look at the first box that you fell down from. Look at the midpoint. You ran into the midpoint and fell out the sky. Hit the quarter point, ran back to the midpoint, back to the quarter point. Now you're going to the next quarter point. And now you're hugging the quarter point, staying stuck on it, right? And now you're above the box over here. But you didn't hold on top of it. So because you didn't hold on top of 613, I'm pretty sure you're going to fall down right on top of 613 still. So the next drop here is probably going to look something like this. Probably going to look like a drop straight down to right around here, you could say. Give me 1 second. My bad. Okay. So yeah, I'm thinking you're going to fall down right on top of 613. And then once you hit 613, like right around here, I'm thinking you'll probably run up a little bit higher. 670, 660. And then we could probably hit that crazy high at 740, 720 before we actually fall out the sky. How do I know you're going to be able to run up to 720, 730? It's because, again, of speed. This is speed, meaning that speed that you just created here, because when you hit this new high, right? So when you went above the midpoint, you didn't fall down on top of it and hold. You fell through it. So it wasn't really a good anchoring point. When you continue to run up and you made this new high over here, right? So the second you made this high right here on the 3rd of July, you had this new range, the new box, new size. And from there, what you could basically say is, now since you made a new high, instantly the first thing that popped up into the, the environment of trades, of the computer systems, of everything that you could think of, all of the above, the first thing that popped into the systems was, now you're going to fall down to the midpoint. But you did not fall down to the midpoint at all ever since you made this new high. So there's still a good chance you're going to fall down on top of 560, 559, if not get a little bit closer to it. You might not fall down exactly perfectly on it, but you could definitely fall down near it. Or, and this is where it gets funny, everybody, this box basically depicts the size from the top to the midpoint, correct? So what can occur is that speed and that momentum could just be applied to the market to the upside, and they could send this market up that much higher. That's basically what I'm trying to explain to you right now. This is for sure gonna happen 1000%. You could check back on this in a couple days just to check. I'll still be going over this chart every single day, because again, this is how I'm going to be explaining to everybody why SPY is going to fall here. This is exactly why we also timed all these drops last year. Every single one of these falls, we timed it perfectly. Some of them we didn't profit perfectly, because again, we were learning how to time the tops perfectly. So in the process of it, like you could say over here, we had some bad trades where we had some options that expired too soon, but the idea was correct. over here, we then started buying options that were far out. And as you can see, look at this. We bought the puts right around July and June, just due to the fact that you were right at 564. And if you look over here, you were collapsing right around the same levels. Yeah, so right around here, 544. Then over here, it was like 532, 534, 533, 534, right around, actually a little bit higher. There you go. 533.69, so 20 cents off, 30 cents off from number 4. And then look over here, 524, you fell out the sky. So 524, remember that. Then you hit 534, 533, you fell. Then you hit 544, you fell. Then you hit 549, you fell a little bit. Ran up to the top here, 564, you fell. So we started noticing those patterns last year. And then we started basically being able to time all these tops perfectly. And again, it's not just as simple as that. There's a lot more things included in the pie. But what I'm trying to explain is that it takes this level of charting in order for you to actually understand what's going on here. You need to put in a lot of work, I'm telling y'all. I'm sorry, you might not want to, you might not like it. You might just want to kind of be a little bit more risky and wild with the trades and ideas, but I'm telling you, you're going to have to put in a lot of work here. So if you haven't been charting and you don't have at least 5-10 charts and you're currently on my Discord already, I'm just letting you know you're going to get left behind, you know? So just make sure you book your one-on-ones with me today or tomorrow. And yeah. Remember, you guys have unlimited one-on-ones. So just use the unlimitedness, you know? Call me whenever, text me whenever. Like yesterday, we were supposed to have 3 one-on-ones, and I didn't have a single one. Nobody basically was able to do it. So we got to fix that. By the way, I don't even think they're in the chat right now. I had to check. But I don't think I saw them earlier. So far, it looks pretty good, though. You fell straight down to the yellow line. Straight down to the opening price. But again, if it stays inside this green box, is, you know, still in bullish territory. Does that make sense, everybody? If it goes below, it's basically now stepping into bearish territory. So they could just buy this up here and send it right back into the high again if they really want to. So you could get a cheap call. $10, $5. If you've already been buying calls and you're still holding them, I wouldn't be buying nothing else. I would let the trade take its course. Allow yourself to not go through more capital and see what you could have done better. Was it, you know, waiting for the 200 to be touched? Was it waiting for the yellow line to be touched? Because remember, this whole entire day, you've been stuck inside the consolidation box, which is basically not really a good idea to trade it. That's the reason why every single time I teach people, I always tell them to wait for reversal point number 4. It's not going to happen most of the time. However, it's going to happen once a week, twice a week. And when it does happen, just like it happened yesterday, you're going to get a nice reaction that same day and the next day. So even if you bought on number 4 yesterday, if you're waiting to average down on today's number 4 or, you know, number 3, that's actually really proper. And that's, you know, a pretty good trade so far. You just got to wait for tomorrow. Make sure you have enough time, though. If it expires today or tomorrow, yeah, you're pretty much clipped. It's done for you. So I would just sell out of everything and try to get a 5-day, 10-day option. If you can't buy them, stick with 0 days for at least a week until you can have at least $200 to $500. As long as you can have $200 to $500, you could definitely see this thing 634. Ran to 635. Yes, this is terrible price action. This thing is terrible. So it's kind of like what we talked about last time, remember? We told you all that last time you ran up, when you tanked out the sky, let's see this. So the day of when you hit this high, it took you to the next day to crash. This day, when you hit the high, it took you to the next day to crash. This day over here, when you hit the high, you crash the same day. This day, when you hit the high over here, you crash the same day. And the next day, you went lower. This day, when you made the high, which is today, looks like you might be crashing the same day. Fingers crossed, everybody. We gotta wait. If you can end up somewhere down here at 633, 632, it's going to be an amazing situation for us all. And then you might even go lower. If you could fall to 631, maybe even, I mean, I don't know if it can fall this low, but 628, you did that last time. Which got me frustrated last time. Because look at this. When you fell down up here, 626, look at the next day. 621. And then look at over here. You ended up hitting that lower level. But we bought new puts up here. So we bought new puts up here. We told everybody we're going to play for that drop to 619, 618 because you didn't do it right here when you fell. You got next to it, but you didn't fall down there. And you actually did it. You went straight down to 617 actually. No, 618. Almost 617. And then from there, you just ran right back up 618, straight up to 624 the same day. That was like a 3,000% trade. The one going down was around 1,000%, I believe. And then, yeah, you just started to tap dance on top of the 200 on the 15-minute here. And now you're leaping above it. So yeah, you might fall down on top of this tomorrow, if anything. I could definitely see you go lower tomorrow. So for today, since we still have the 0 days, it's still a little risky. We still got to see. We still have some time left for today. We have about another 2 hours left. And then from that point onwards, we'll pretty much just see if we're going to buy into something else that's new. You know what I could do? Create a little consolidation for this trading style. Boom. We just updated it. Remember, everybody, I told you if you fall down to here, which is 632, you could buy your first call, which is going to be $5-10. You're then going to average down on that same option if it continues to fall to 631. As long as you spend only like $5, $6, you're only gonna buy it for like $3, $2, and that's good enough. The strike price that you're gonna buy once you fall down here at 632. Let me go ahead and put it on the screen, everybody. So go ahead and pay attention here. This is the call that you're gonna buy once you hit 632. So that's gonna be a change of 1, 2. 2 strike prices. So this option right here costs $100, right? It's gonna go 1, 2. So it's gonna be $20. So this option right here is the option you're gonna buy at that point there. It might even be cheaper, like $15, $10. And then if it falls another dollar to 630, boom, it's gonna be worth $6 to $3, where you're gonna buy a second one. You guys understand how I can tell just by looking at the current prices? That's all I do every single day, and it's pretty much the most simple thing to do. Don't look at theta, don't look at delta, don't look at gamma, don't look at none of this nonsense. Just look at how much the options cost. See if you know the technicals kind of make sense. Does it look like you're going to fall down to the 200 today? Does it look like you might do it tomorrow? Right? So kind of, you know, write down all your notes. If it doesn't work out today, see if it works out tomorrow. Because then all that means is that that same idea and same concept of you holding an option overnight whenever you have a peak. So if you know you're at a certain level where it's a peak, it's kind of a good point to get a 5-day to 10-day option, right? So that will make you more confident the next time you actually run up into a high. Now you have that written down. So yeah, we're going to buy a 634 call the second you fall down to 632, 631. And 634 is basically the midpoint. So this is what it's going to look like. You're basically going to fall down from this level here. Okay, so it's going to look something like this right here. You're going to fall down to this area down here. And I'm going to color code this line a whole different color. And after you fall down to here, you're simply just going to run back to the midpoint. I'm going to make this a yellow line so you all can understand that it's different. So this is what I'm looking for the market to do right now. Fall down to here and then run instantly right back up to here. If it continues to run up, that's okay with me. It's fine. We're just going to do it over here. We're going to do the same thing we're going to do to the downside, but we're just going to do it to the upside. And then right after we sell the calls, get into the puts right here at that perfect point. Sell the puts down here. And then see if you're going to go lower. This is the beauty of this trading style here. By the way, you see these lines? They're not that perfect. I know. See how it's like a little, it's not like perfectly symmetrical and stuff with one another. This thing took me like 6 hours to make. In fact, I have a certain tool that I built to make sure that these lines are perfectly straight. And that tool alone took me like 2 hours, 3 hours to build. I don't even know where it's at no more. I haven't used it in like months. But it looks like a street. Actually, you know what? Let me look for it right now so I can actually just have it in the background. I'll show you what it looks like. I definitely named it something. Ideas. November trading styles, great wedge. This is September. Let's go down. Consolidation zones. I definitely didn't fix it that long ago. I think I fixed it in like maybe August. New trading style. how do you do that again? What is it? Control F7? Control F7, is that it? Control F? There you go, Control F. Tool. Does it pop up here? It says 0. Tool. No, there's nothing for trading style. I'm trying to make it highlight the word for me so I can find it easier. January new trading style. See, why doesn't it let me put style? It's T-Y-L-E. Style. There you go. Is it this? I'm not gonna lie to you, I don't feel like going back to July last year, so we're just gonna skip this for now. I have no idea where I put it. The grand upside. I have no idea where it went. Alright, I'm done. I give up. We'll figure it out later. I'm gonna be here looking all day. Alright, so you're holding the downtrend now. You fell below it, got really bearish. You almost hit the 200. Now let's see if you're gonna fall down right on top of the 200. You hit the pink line, you fell down lower. Now you're hitting the green and purple line and the blue line at the same time. So let's see if that's going to cause you to go lower now. Again, it's a progression system. Just like how you hit the pink line over here. We told you we want to see you jump up. If you don't jump up at the pink line, either the green or the blue. You held right here on the blue. You ran up to this higher point. You then fell down to the low. Went below the EMAs. So now this is a whole different trend. Now you're becoming bearish, right? Once you get next to the 200, then you hold on something. That something was probably near the opening price, around reversal point number 1, as you all can see. So you held right around reversal point number 1. And then you just bounced up to the next number 1 again. So now you're doing exactly what you do in the beginning of the day. If it can't get above 635.10, you're just going to fall out the sky. I'm so happy we created a new zone finally. We haven't created one in days. So again, this is how markets normally trend. This is exactly what we're going to play the next couple days. This is all of our trades, pretty much. So we're in the puts now. Let the market drop out the sky. Boom. Let it fall to 632. Boom. Hop into the calls. Straight to 634. Sell for whatever gain we can get. Hopefully it's not too small because the market's going to close around that time probably. But yeah, we'll be safe with it. After we do that, we then buy an overnight put. Tomorrow we sell out at the opening price. If not at around 10 to 11 o'clock. Then what we're going to do is around 12 o'clock, we're going to hop into a daily call and try to see if we could play the upside, going right back up again. Right back into the trends of 630 and 636. So that's the game plan right now, everybody. If you want to follow along, you can go ahead if you have your own idea. It's best you follow your own idea until you feel like you need some additional resources, and then you can kind of go ahead and aim out, like outwards. Look at some articles. Don't watch no YouTube videos. I'm telling you guys, don't watch no YouTube videos, please. They're not going to help you. They all say different things. They all think differently. And unless they've been trading for 50,000 hours or more, there's no point for you to listen to them, honestly. And guess what? You know, a lot of them, they're not going to trade that much because their YouTube pays them a good amount. Their Discords pay them a good amount, right? So there's no need for them to ever go outside, you know, the box and really try to aim for something extreme in terms of helping people or aiding people. So they just never get to that next level. Some of them are good traders, definitely, 100%. But again, some. You could probably count on one hand the good traders on YouTube, if not maybe two hands. Maybe two hands. Like the unknown ones that have, you know, not that much watchers. So yeah, I would much rather you read articles because then you can sort out where this article came from. You could figure out who's the author. Look at his other projects and his other work to see if he's biased. And then boom. Build your opinion. Come on, SPY. Come on, SPY. If SPY falls below 634, you could fall straight down to 631 and then maybe 630. Tomorrow you could fall to 626. That's also the extremity. This chart right here is basically your weekly chart. Your weekly trend chart. If I zoom out, you'll start to understand what's going on. It's just always following these lines basically. So it's kind of a little neat thing that we found. We found this out last year. This is one of my other trading styles that I don't really teach. It's kind of a personal one. I only teach certain versions of this. But, no, yeah, this one's really cool. You see how it runs from here to here? Back down to here. Back up to here. Running over, jumping up, anchoring down here. Running straight up, almost hitting it here, falling down to the middle. Back up to here, to the middle. Back down to almost the middle. Now you're at the middle again. Now you're at the line. Now you're hitting this line. So, yeah, it just always works. Not the same way, of course. It's always different every day. But again, it always works. That's the cool part. So I'm wondering if the market's just going to fall out the sky here. Because you didn't even hit the top perfectly. So you might hold here overnight. And then tomorrow hit it. And then we can buy into the 5-day option finally. We're waiting for 536 in order for us to buy the 5-day call put. That's what we're waiting for. So far we only bought the 0-day off of 564. 534, sorry. This thing is running up so much, I'm already forgetting where we're at. Okay, so 634, that's where we bought the put the first time in the morning. And then we're going to buy the next one at 636, but you couldn't get up there. You only ran $1.90. Then you fell down, lost everything. Now I want you to basically do another dollar to the downside here. And fall right around 632.70. Yeah, same spot pretty much. How's Tesla? Tesla's still stuck at the bottom. So yeah, we're just gonna wait for tomorrow and then buy a new option.